Hey all, welcome to ShareTrek. This is Raj here, friends. I'm back again. I have a few things that I wanted to just discuss with you guys because I'm finding it very interesting. As you can see, behind me, I have the chart for S&P 500 futures. And let me go to the actual indicators itself because that's where it's very clean. Now out here, you can see there's a trend reversal that has developed. We went up and then we created this doji candle, which was stopped by this hard stop resistance that I was mentioning about. And then we came down again today. And right now we are down 0.85% or around 49 points on the S&P 500. Of course, that will be supported, the 200-day exponential. If it does not manage to be supported by the 200-day exponential, and if it falls below this diagonal line of support, as I mentioned, we are going to see a replication of this kind of a drop. So let us say if it was to fall down from here, then I would take a measurement from here all the way down to the breakup. So let us draw a line from here all the way up to here. I'm going to just move this across, and if we have a breakdown from here, let us say in 2 days, if we start to fall down, and if we did fall down from this diagonal line of support, then I think we have a potential of going all the way up to 5,119 on S&P 500. I'm not saying it's going to happen, but I'm saying that now the odds of that are improving. This is one thing I want to talk to you about. Even if you look at the NASDAQ has also done a trend reversal, fallen below the 9-day and the 20-day. How soon the fortunes change, right? And we have a gap up which has to be filled up. So that's going to attract, it's going to act like a magnet. Again, this is a bear flag that we are seeing out here. So similarly, if you took the length of this flagpole and transpose it on this exit side, then you will get how far it will go down. So we need not calculate this right now. I think it's still a long shot, but the odds are improving for that. And also the VIX has started moving up, not virulently, but in a significant manner. So things are looking very dicey at this point of time. And now if we go and have a look at our CNBC homepage, you will see a prominent article says, Trump says tariffs coming in April will probably be more lenient than reciprocal. Now, I do not understand exactly what it means. The earlier idea was that if you do reciprocal tariffs, and if you tell the other country that you are charging us 2%, so we are going to charge you 2%, then the incentive is there for the other country to reduce the 2% or make it zero, so that their export also is reciprocally having the same kind of tariff, which will be zero. And that will usher us towards more of a free trade and get us out of these tariff problems, and it will be good for the consumer. But now what we are hearing here is that Trump is now saying, I really don't care how much tariff you are imposing on me, but I will be lenient to some countries and I will allow them to have lesser tariffs. So the thing is not very clear to me. It seems more confusion about the tariffs. But if this statement was made in order to improve the prospects of the stock market, I'm thinking that it's not working yet. Maybe it might work tomorrow, but there'll be more clarifications from the officials, and then that could be something. Then you have this headline which says Treasury Department is set to lay off a substantial number of employees. This is on top of the weak consumer sentiment that we saw earlier. And all these Treasury Department employees are also consumers. So they are also going to add to the weak sentiment of the consumers. And also they're going to add to the number of unemployed. And all those industries who are catering to them, whether it's a coffee shop, or whether it's a departmental store or a grocery, all of those are going to see a reduction in their business because these employees do not have a job anymore. And therefore, that's also going to reduce employment in ancillary sectors. So it's a domino effect that is being set off. So this is another negative thing that has surfaced up so far. And I think that at this point of time, this headline is good. Bank of America sees gold raising to 3,500 on central bank on China buying. So I think gold is a good opportunity for us because gold has consistently improved its value. It's a store of value, whereas I showed you the Fred chart where we have seen that the dollar's purchasing power has gone down to 33 cents or even 3 cents or something like that over the years. So the best bet is to have hard assets like gold. And I would have said real estate, but real estate actually would not be able to maintain as much of the value, because to buy real estate, people need to have money. They have to qualify for the mortgage. And if they don't have jobs, they won't be able to qualify for the mortgage. Whereas with gold, gold can be cut into smaller pieces, and smaller parts of gold can be sold for meeting basic necessities and stuff like that. So gold is more scalable as compared to real estate, and therefore I think this headline seems more apt. Now, coming back to where I was with this whole thing, we have to be very careful right now, and I have already taken off my shorts bets. I had reduced my FNGD, and I'm going to sit on the sidelines to watch until I have a clear understanding of what exactly is happening in the market. There's a lot of uncertainty out there. Maybe April 2 can clear up everything for us. But if April 2 arrives and Trump says that now instead of April 2, I'm going to decide on May 2 or June 2, then that's going to just prolong the uncertainty. And because we cannot read President Trump's mind, we have to wait and watch what happens. I think April 2nd is going to be it. In the meantime, we have some data that's going to come out, and it will give us some kind of an idea of how things are going on. For example, we had the durable goods read in the morning, and that didn't go as anticipated. The forecast was minus 1.2, but it came out plus 9. Plus 0.9%, and I think this could also be because of the front loading of all the tariff related purchases. Maybe a lot of companies are stocking up in advance in order to avoid the tariff. And I personally also bought a TV yesterday in order to avoid getting into this tariff mess. I also bought a sectional sofa a couple of weeks ago. I did all those purchases because I didn't want the tariffs to be tagged on top of that. Maybe something like that would have happened that had improved the reading for durable goods month over month out here. And then if we go tomorrow, we're going to have the GDP growth rate final quarter over quarter. And that number is something we have to look at, because that will give us an indication which direction we are going. Are we going towards a recession, or is the economy strengthening up? And that will also inform Jerome Powell when he comes out to talk to us. And then on Friday, we have the core PCE index and personal income month over month, a whole slew of data out here, which also has the capability to move the markets. But remember, we are still not yet on 2nd of April. This is just March 28th. And 2nd of April happens to be coming up on Wednesday. So we'll have 2 more trading days in April before we hit the April 2nd. So I would expect that some kind of damage control effort will get started. Maybe what Trump was trying to do here was to make the markets calm down a little bit, because the trend reversal that we have seen here, this looks pretty dangerous, because if it were to go down and break out of this bear flag, then we are going to see a huge drop again. And that could take us very close to the recession possibilities, and we don't want that to happen. So that's what I'm thinking overall. And my thoughts are to a certain extent supported by what we see here as a headline from Barclays. It says Barclays cuts S&P 500 target to lowest on Wall Street as tariff pressure mounts. So there is going to be some give and take, because United States is a huge country. It's a powerful country. Most of the Americans have high per capita income. They are a consumption-driven economy. They're a service economy. And because of the supply chains that were built and the outsourcing that was done over the decades, the footprint of US is wide. And as US withdraws, it's not going to be without a lot of side effects. There's going to be a tremendous amount of side effects definitely happening. And also the status of US dollar as an international trade currency and US dollar as a reserve is going to come into question if the world starts feeling that US is withdrawing into itself and that its military capabilities and others are being compromised. And one of the headlines that does not help is this one out here. where we have the Atlantic publishes full signal thread with Hegseth words after Trump says text not classified. So the way this whole saga developed was that there was a journalist in Atlantic. He was somehow roped into this signal chat between the White House officials who were discussing an attack on Yemen. At that time, that journalist felt that it was just a joke, maybe it's not true. So he didn't act on anything. He just waited and watched. He didn't know why he was involved in this whole thing. But then as he read that bombs are going to be dropped and all, and then he saw actually bombs fall in Yemen, he realized that he was actually in a live war planning and situation monitoring chain. And being a responsible journalist, he decided that he's not going to publish those confidential things, but he definitely brought it out that this has happened, and he was involved in this chain. And as a result of which, a lot of defensive activity started in the White House, and they were saying that no, this was deliberate, or it was not done deliberately, it's classified, it's not classified. Finally, Trump came out and said, nothing doing, there is no problem, and Waltz is a good guy, he has learned his lesson, this won't happen again. And he said that anyway, the information out there was not classified. And now, in order to take advantage of it not being classified, the journalist has said, okay, Trump has said it's not classified, a president can declassify anything. So even if it was classified before, now that Trump has said it's not classified, it's like it has been declassified. So he has gone out and shown this whole thing out here. And this does not inspire confidence, because remember, when Russia had not started the Ukraine adventure, the image of Russia was that it's a very strong country, it's a strong military power, and it's a superpower. But since Ukraine has been holding Russia at its borders for almost 2 years counting, it doesn't seem like Russia is that strong. And now we have reports of old World War II relic tanks and all being used by Russia. And many countries which are buying weapons and artillery and ammunition from Russia are not able to get that. So given those kind of things, right, US is still very strong because they had recent conflict in Iraq, in the Middle East, and they have been very active. So there is no reason to doubt the military capability of United States. But incident like these shows that the civilian command of the military is probably not professional, or probably not up to the mark, and maybe it has a lot of amateurs in it. And therefore, even though US may have a very strong military, wielding it is a question. Like you might have seen in movies where one of the characters gets a gun but is not able to protect themselves because they're not able to pull the trigger, they're not able to aim on the adversary, and ultimately they get subdued. So it is something like that. The US military is a very potent weapon. Pointing, aiming, and shooting is what the civilian command has got to do. And out there, it seems there is a bit of weakness out here. Maybe this is transitory weakness and we have got everything in order. But FBI, CIA, and military, all of them have to be in top condition. And the leaders who are leading them are taking orders from the civilians who have been put on top of those agencies, and they have to perform well. So we are going to see a lot of weakness out here. The government has to get its act in place and has start to give leadership so that the stock market doesn't have to worry. And remember, a lot of money is coming from all over the world into the US dollar and into the capital markets here, because it's a shining city, and United States provides transparency, institutions, and good rule of law, and a level playing field for all the companies, and has access to the globe. And therefore, many countries are putting money into the United States capital market. They are putting money into the United States Treasury. All of those is at stake when we have headlines like these. This has to stop, and hopefully we start a recovery out here. But as retail investors, especially foreign retail investors investing in the United States, we have to be a bit careful, and a little bit of exposure to gold is not harmful. And also having hedged products which can protect you against any drop in the US dollar is always helpful. For me, I'm going with Canadian depository receipts which are hedged, and that's how I get my exposure to the US for the most part. And there are some parts of my portfolio where I have direct exposure. I just thought I'll put this out to you guys so that you can do what you may with this information I have given you. It's an assortment of information, but let's pick up on this maybe tomorrow at the live stream. And for the genomics guys, it's not looking that good. Genomics is a total wipeout out here, 7% drop for Verve, and the losses are pretty daunting out here. As I mentioned, if we are heading towards recession or stagflation, genomics is going to be the first casualty out here. And in between all of these things, people are going to be trying to flee towards safety, which is basically bonds, gold, and hard assets. So that's all, my friends. I hope you liked this segment, which was an impromptu segment. I had no script or anything. It's just pure consciousness, stream of consciousness. I'll catch up with you again. If you like this, please put a like out there, and I'll see you in the live stream tomorrow. Bye for now.